It's a toxic mindset that a lot of people show up with, like, I can show up today and make money, and then I'm supposed to show up tomorrow and make money. Not really. Depends on the conditions, depends on your strategy, depends on how diverse your bag of tricks are. It could just be that you underperform for a bit. That's what some of the best traders to ever do.
What's your general feeling, man, with this kind of slow crawl to nowhere in the equity markets?
Yeah, I mean, I don't know. Look, we have days that are rip-roaring trends and nobody knows that they're coming. We have days that are anti-rip-roaring sideways days and nobody knows that they're coming. I think sometimes it's easy to get caught up in, oh my goodness, this or that, but these things repeat themselves. They happen all the time. It's part of markets. We have sideways days where, you either have a bag of tactics that you can apply to different types of conditions, or you have a good enough process that takes advantage of trends when they're present and maybe loses money when markets go sideways. Or you are really, really good at making money when the markets go sideways and you lose a little bit fighting trends. Or you don't have any of that and you're a big mess. So it's just all about understanding the conditions and where they're changing and where your strategy is giving you edge. And so who knows? Obviously the market is in an atrocious low volume, grindy back and forth mode in the indices. So, for me, that means be more selective. My edge comes from the edges, really play like a mean reversion until proven otherwise. So yeah.
That's a great observation. I mean, over the course of my long career, the paradigm of the market changes, day to day, week to week, month to month, right? Things change. There's different drivers. It takes a breath, it inhales, exhales. And, you develop a strategy, right, over a period of time, and it's working for you. That paradigm changes, and all of a sudden it stops working for you. And you're like, wait a second, I'm doing everything I was doing before. But the problem is you didn't recognize the fact that things have changed a little bit, and then you have to adjust, or you have to go to strategy B. I think that's key for
Right.
longevity.
Right. Absolutely. I think where I've gotten to and what I prefer is having those different tactics and things that you can apply based on conditions. But there really is no shame in. I think a lot of traders have a hard time coming to grips with this, that it could be how they operate. Like, there's people who've had illustrious trading careers who simply know that when conditions are a certain way, they're not getting their fat pitches and they're losing a little bit, probably over a month, 2 months. For longer term guys, that could be a quarter. I think it's important to, like, potentially embrace that as a trader. I think it's a toxic mindset that a lot of retail people show up with, that, like, I can show up today and make money, and then I'm supposed to show up tomorrow and make money, and I'm supposed to show up the next day and make money.
Yeah.
Not really, right? Depends on the conditions, depends on your strategy, depends on how diverse your bag of tricks are to be able to handle different volatility conditions and things like that. It could just be that you underperform for a bit, and that's what some of the best traders to ever do, and they've grown comfortable with that. So
Yeah, and it's just like looking at a long-term investment. I mean, my dad does this all the time. He logs into his investment accounts every day, it's like, and he calls me up. He goes, "Oh, I lost $1,000 today. I made $1,000 today. I lost 5,000 today. I made 5,000 today." I'm like, "Dad, this is not. You're not trading this. This is an investment. This is going to keep going." But the point of the story is, it's cyclical, right? It's a sport for him. I'm like, "Dude, you're killing yourself doing this every day. Stop calling me."
get back on the course, man.
I know. I know.
There's different ways to go about trading, as we know. Okay. I think that 99% of good traders have a contextual view and then let's say an execution model to align them with that view. So whether that is 30-second opening range like PAX uses, or whether that is a rank and distill NADRO higher time frame lines in the sand like I come up with, you essentially have a bias that gets developed by some piece of context. If the bid gets above the opening range high and holds, that's a bullish context you want long risk on. And then you have your execution model, which is where the stop goes and how you pay yourself as it goes, how you add those type things. If that trade fails and gets below PAX's opening range, theoretically, he's going to be looking for shorts. He's short biased. He might hold some overnight till the next day, blah, 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 blah. It's not right or wrong to be long and short the same day intraday as a trader. It oftentimes is very wrong to be getting long and short from the same price region, because that means that you don't have a proper contextual line in the sand where that changes. If you're buying and selling in the same area, that means you don't have a contextual view. However, if price gets and holds above this level and you're buying, and then it gets and holds below this level after that failing, and you're selling, that is more proper, I think. It could be the opposite. You could need to buy from a low area. You could need to sell from a high area, right? It just depends on the context and the strategy and things like that. But that's important. You layer in the trade idea, the line in the sand, the contextual view, the hypo, and then you have the execution model. And those things are separate, guys. And there's real magic in that. And I just try to teach people that all the time. The profile itself has quite a poor low. So the potential for stop run, as we're potentially seeing right now, as it just dropped a little bit there and continues to, the stop run that we're witnessing right now is what I was referring to. That is a high potential. So for me, okay, let's see what happens here. Does this look like a stop run? Does it feel like a stop run? Let's pay attention to the speed of the tape. Let's see if buyers snap it back. Let's see what happens here. A poor low or a poor high is nothing more than multiple highs at the same general price area, give or take a handful of ticks, or multiple lows in the same area that occur. That's all it is, guys. A triple top is a poor high. A triple bottom is a poor low. Obviously, it all depends on what time frame you're looking at and where you're seeing those things. Okay, so now the low is through. I'm looking at kind of 375 spot 9 or something in terms of kind of that low that I was looking at. So now we're nicely through there. So far, there's quite a bit of energy behind this, which is to be expected from the stop run, but it's not snapping back quickly. It's kind of hanging at the lows, and then there's another press. So might just be one of those things where this is actually a new break versus just a stop run through the area, and we won't take the trade. I think it's very important to understand identifying the difference there between just from one extreme, just to say, oh, I'm going to throw a limit order out here, and if it fills, it fills, right? It's not just all about price. I think that's the small edge and only additional edge that order flow and tape readers and whatever you call them bring to the table, which is differentiating. It's not just about the levels. It's not just about I'm bullish from here. It's about, okay, I'm bullish from here. What happens when we get there? What does it look like? What does it feel like? What is the speed, the energy, the delta, all of these things, right? That's the benefit of adding order flow to what you do. All right, buyers are coming in strong. I will say that. You see the delta, how it had pressed all the way to this low area here and then just absolutely snapped back. I think that's important to note right here at this low. For me, though, I really want to see something get back above and hold. Let's just call it 76. We can highlight that level here. That's kind of the region where, for me, I don't really want to stick my neck out down here. We have elevated relative volume. We have sellers that are active. Granted, we have seen the buyers respond on the tape. For me, I want to play this safer. I want to see us get back above this area, and then I can find a pullback to hop on board. For some of my students right now, if you're listening on the back side of the trade, right, rather than just trying to be the hero and catch the front side. Yeah, I agree, JD, about crude oil. Let's take a look. I tried to buy it once this morning right here, and then I think I scratched out of it right there. But I agree that crude oil is another setup that I like pretty well contextually. For my students on the call, it's yearly prior value low. It is, quarterly and monthly are the same. So it's a marginal quarterly, monthly, let's call it extreme fade. You'll have to watch out for the prior values there. But then the weekly's picture perfect here. A weekly prior value low, weekly developing value low. This is a good spot. I'm going to put one on here and look to potentially add to it if it starts working out. We'll keep an eye on that. We have a great trade location. Because of how much aggressive selling there's been on this market, I've protected the position. I'm not going to lose any money on it. I don't want to be in if we come near those lows again. I will say this. If the passive buyer is able to win this battle, there's going to be potentially some short inventory that gets absolutely murdered on the way up. And we will be at 62.50, where my target is in a lickety split. So, anyways, that's my take on it right now. Probably looking at a scratch on this position, but I loved the trade and I would take it again.
This presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader, LLC. Trading futures involves substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.